Hello, everyone. My name is Josio, and I'm part of the Cerro Dinero Investment Group. And today we're going to be talking about fake breakouts. Now, what are fake breakouts? It's really simple. So, typically, whenever you have a breakout, like in the pattern you guys see right here, we're using Amazon as an example because lately it's been doing really good following technical analysis, and I can use it as an example for you guys to learn and to spot certain things that we talk about in this channel. For example, we talked about how we can have a bounce out of a trend line, out of support or out of resistance. But today, specifically, we're going to talk about a breakout that doesn't really happen. How do you spot those type of breakouts, and how can you not fall for them so you won't lose money? So let me give you guys an example of how a breakout typically works. So we might have a triangle, right? And we might see a stock potentially doing a breakout in sections like this. As you can see, we have a good 5 major points where potentially a breakout could have happened. Now, just to give you guys a background, we're looking at Amazon and we're looking at the 4-hour chart. Let's start off here. Here, we can notice that the stock reached the trend line and then it dropped back down. And then it created a second candle, right? Doing the same thing. And after that, it's just dropped. Let's look at the next one. Right here, we see a candle almost touching the support line, creating a second reversal candle for it to come back up. So that leads us to our first point that we had to pay attention to. What's the next candle that comes after that candle that could potentially break out? In here, we can see that the candle was large candle, right? And then the second one, this is typically a reversal candle. That means that there's a lot of buyers coming in at the same time. So it's kind of like a battle between the buyers and the sellers. And it's kind of like in limbo. And we had to wait for the next candle to see what's going to happen. Clearly, after this candle, we had this huge green candle, right? So we didn't have a fake breakout because he never touched the breakout point. But again, this is one of the main things I will look into in case it does break out. Now, the second thing we have to pay attention to, what type of candle it is, right? In here, we see several candles with different patterns, right? Type of candle sometimes might give you an idea of if the breakout's going to happen or not. Again, using the same example that I gave you guys earlier, right here, we have a reversal candle. And in here, we had a candle with a long wick. That tells me that the price actually dropped, right? And then it recovered up to this point. Was that a fake breakout? Technically, it was because it did break out of the triangle. It reached 200 EMA, which is this blue line right here, guys. And then it kind of recovered. Now, how can we predict whether this breakout's going to continue downward? Again, let me just draw an arrow for you guys. So at this point, we want things to go this way, right? It clearly that didn't happen. When you have a long wick like this, typically we have a reversal coming up, right? So that's the second thing we had to look into. And then the third and final thing that I like to look into, and it's probably the most important one, your time frames. Your time frames are everything. Typically, to get in and out of a position, you want to look at the smaller time frames, especially if you're day trading, right? Let's say we would have been day trading Amazon, for example. So here on this specific day, Amazon just took off, right? From one end of the triangle to the other end. And then it stopped right here. But then the second candle dropped, right? It technically break out, right? But then it came back down. It just didn't work out, right? So if we would have paid attention to the time frames, we would have an idea of how this breakout was going to react. Now, we're looking at a large time frame, 4 hours. If you're a day trader that is planning on holding a position for more than one day, we're talking about 1 to 5 days. and you're looking at the 4-hour time frame, then this is probably a good selection for a stock as big as Amazon to predict whether a breakout is actually happening or not. With smaller stocks or smaller tickers, I will use smaller time frames. But we're talking about Amazon. Amazon, it's a large number, 3,205, and it typically does large moves, right? So for example, from here we saw a move all the way from 3161 all the way to 3250. So that's a large move. Now, there's a couple of things that you got to look into, right? So, first of all, this large move needs a pullback. We all know that whenever you see a large move like this, the stock needs to take a break. So that's the pullback that you see here. Now we drop hard and then we recover again. Notice how it's following this triangle so good, so well, right? This is technical analysis, guys. For those of you guys that don't believe in technical analysis, I'm clearly showing you how patterns make sense here. Once you start paying attention to the patterns, you'll start realizing that there's more to it, right? You can actually make money out of these things. You just have to understand the patterns. One thing is, being able to recognize them. The other thing is being able to understand them. Here, I had an idea. If I'm looking at a bigger time frame and I'm holding contracts for more than 1 week, then it's clear to me that the second candle didn't follow what I was expecting it to do. I wanted this to keep on going up, and it didn't do that. So I closed my contract here because, again, the second candle that came after this one didn't do what I expected it to do, right? So you got to follow your rules. If your next candle is another green candle and it keeps on going up, then keep your calls. If the next candle it's red and it's coming back down, then that should be your stop loss should be coming in, right? Actually, when you do experience a breakout like this one, your top of the triangle typically becomes it's your resistance, right? But as soon as you cross that resistance, it turns into support. So a good rule of thumb would be that if the stock or the candle comes below the line, below its support, its new support, right? Because it was a resistance level before, below it, then that should be your exit because it didn't hold the candle, right? So you're looking at the candle before it breaks out, and you're also looking at the candle after it breaks out. So after it breaks out, if it doesn't hold its support, again, which is the trend line that you see here, then it's probably not, it's what we call the fake breakout. Another thing that's important that you guys should also take into consideration is that typically strong resistance and support points are a lot of times in sections where the numbers end in a zero, right? So 3250, it's an even number. So to me, that was another indicator that this might be a strong resistance point, right? So again, like numbers like 3200, 3100, 3000, those are typically strong resistance and support points. Again, I'm not a financial expert, but out of experience and, dealing with the stock market, I have noticed that many times the support and resistance points are the big even numbers, right? So right here we are technically at 3250. So to me, that was another indicator that this might be a strong resistance point, and that the stock might not surpass it. And that's exactly what happened. It didn't. Same thing here. Notice I have all this stuff right here makes sense. Both my lines are following the trend exactly as how we predicted it. So it's this simple, guys. Look at the time frames, look at the type of candle, and look at what happens before it breaks out and after it breaks out, right? Also, if there's any EMAs, any B bands, right? Anything that might be another barrier, another thing that could potentially stop that candle from getting to a new high or a new low, then I should also take that into consideration, right? Now, I'm just going to show you guys a second quick example so you guys can see another form of breakout. So in here, we're looking at Chronos group, and we're looking at the weekly chart, right? And it looks like it attempted to break out a couple of times. We have 1, 2, 3, 4 times, right? And as you guys can see, that big red line, it's my resistance line. That resistance line tends to be a point where the stock tends to bounce back down. So this week I was looking at chronos, right? And as you guys can see, 9, it's the resistance point. So it was really simple. If it crossed 9 and it held its support, then awesome. Keep them calls open because it holds support and it broke out. It doesn't necessarily have to be a triangle. It can just be a strong resistance or support point. In here, we're looking at a resistance point. Now, what happened, guys? It looks like the candle went all the way up there. It broke out. So another fake breakout, and then it came back down. Now, this is weekly. It's really hard to tell during the weekly chart that this is going to happen because it takes several days for this candle to form. But if you look at smaller time frames, you can clearly see this picture. I'm looking at the 4 hour. Again, you can use any time frame, but to me, the one that matters the most, according to my trading style, is the 4 hour because I tend to hold positions for about a day or two, and that tells me that I'm at least going to see 4 candles, right? Showing me the pattern and the history that the stock is making, right? So here, you guys can see this candle. It broke and then it came back down. Again, fake breakout. If you wait for the next candle, you should know what's going to happen. If I look at a smaller time frame, like the 1 hour, so just to give you guys an idea for those of you guys that are new, every candle here represents 1 hour. Every candle here gives you a history as into what happened within that hour. So in this hour, the stock dropped significantly low and then it recovered. In this one right here, we went from down here all the way up there, and then kind of we remained there, right? So that's good. That's when the breakout happened. But then the next candle just dropped hard, right? So my again, based out of the rules that we talked about, the second candle after the breakout tells you a lot. So the second candle here was a clear example of how what it was a fake breakout and that I was supposed to either close my contracts or don't open any contracts if the breakout did happen, right? It's that simple, guys. Also, if you guys want to get more technical with it, you guys can also look at the volume, right? In here, we can it didn't really show much volume, but it did turn into red after having 3 green volume candles, right? In here, large red volume. So that's another indicator that can potentially help you guys out in your decision making. Keep in mind, this technical analysis is all about decision making, knowing how to make the right decisions at the right time, especially following price action, right? Because this is happening live. You're trading as the stock and as the candle moves up and down and it changes patterns. So you have to be able to recognize these patterns as they are happening, not after they happen, not right now when we're doing a review. When you want to be a successful trader, you want to recognize these patterns as they are happening because it's really important. Your decision making is whether it's going to make you money or not. It's not going to make you any money, right? So that's it, guys. I just wanted to do a quick video to talk about fake breakouts, right? And I showed you guys 2 examples of how a fake breakout can potentially make you lose money if you don't know how to spot it or if you don't know how to react to it. Again, my name is Josio. I'm part of the Zero Dinero Investment Group. And if you like my work and like what you see here and the things that I do with technical analysis, I highly suggest you to join our channel. Again, zerodinero.com. And we also have a Discord group that you guys can join where we give out charts and signals for those of you guys that are interested in learning more about technical analysis and overall stocks. Thank you for watching. Don't forget to like and subscribe to the channel. We're slowly growing and I appreciate every single one of you guys. And let's keep it up. Thank you once again.